Realty Income stock, ticker symbol O, the famous monthly dividend paying stock. And this one is one of the most watched videos on the channel and people seem to like it. So let's do another analysis on Realty Income. This stock is down 11% on the year-to-date chart, underperforming the SP 500. People love Realty Income stock because of multiple reasons, one of the main thing being the dividend. And I understand why, with dividend yield at almost 6% and of course the monthly dividend payouts. And if we look at the past 5 years, we see that Realty Income underperforms the SP 500 big time. And keep in mind, this is including dividends. So could this be the perfect time to buy a Realty Income stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Realty Income do? Realty Income focuses on acquiring freestanding single unit properties leased to industry leading operators under long-term net lease agreements. Realty Income is the 5th largest global REIT with more than 1,300 active clients in 85 industries and more than 50 years of operating history. So all of this is very impressive. Another thing that I really like about Realty Income is the fact that they have A credit ratings. Net income was reported at 280 million, down from 227 million in 2022, so this doesn't look any good. AFFO per share increased 1 cent year over year, which is nice, don't get me wrong, but it's almost no growth here. Another really important number is the net debt to EBITDA. Realty Income is sitting at 5.5, which is a great number. I prefer a range of 5.5 to 6.5, so this looks really good. For the full year guidance of 2024, Realty Income expects to deliver a AFFO per share in the range of $4.13 to $4.21, occupancy rate over 98% and acquisition volume around 2 billion. To me, this looks pretty decent. In here we see that Realty Income has a very diversified portfolio, with the biggest client representing a maximum of 3.8%. This looks really good to me. The industry diversification also looks pretty good, with grocery stores being the biggest industry at 11.4%. Convenience stores is at 10.2%. And I would prefer a maximum of 10% here, but it is pretty close, so nothing that worries me a lot. Realty Income has a high focus on retail with 81% of the total portfolio. Industrial is second with 12.7%. And Realty Income has minimal exposure to retail companies that are likely to go bankrupt, which is very important in my opinion. Realty Income is really focusing on external growth opportunities, which is really nice. The thing that I like is that the line goes up pretty consistently. And now that we know a bit more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Realty Income is a 37 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. Right now it is sitting at almost 13, indicating they might be undervalued. Later in this video I will show you my 3 price targets for Realty Income stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 4 billion and in this graph we see that revenue went up in the long run. It has to be said that for a REIT it is growing really steady and consistent. In the past couple of years revenue really skyrocketed, also due to some acquisitions. We see that margins are going down over a longer period of time, and this is of course something that worries me a lot. especially since 2020 the margins look not that great. EPS is showing similar trends as the margin and the revenue. For a REIT, it looks pretty decent. Analysis expect that from here EPS gradually increases to $1.7 in 2027, and we see mid-single digit growth per year on average. For the revenue, it is also looking very interesting, with an estimate of $5.36 billion in 2025, and growth numbers are fluctuating a lot. Return on assets is sitting at 1.6%, which is a low number for a REIT. Return on equity is also looking a bit low, and the most important number, return on invested capital, is sitting at 1.94%, which is a low number, even for a REIT. It is also lower versus the 5-year average, so that doesn't look good either. Current ratio is at 1.28, which is a decent number for a REIT. Nothing special to mention here. Historically, it looked pretty good to me. Right now, Realty Income has $22 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Realty Income has $232 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. But when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at almost 6%, which is a great number. And keep in mind that Realty Income pays a monthly dividend instead of a quarterly dividend. Annual payout is a little bit over $3, and payout ratio is around 74%, which is below the 75% average for REITs. The 5-year growth rate is at 3.6%, which is a decent number. On top of that, they increased the dividends for 26 years in a row, which is really nice. And here we see the dividends paid since 2012, and to me this looks really good. Realty Income really likes to increase the dividends at a low rate, but over a longer period of time this really adds up. In this graph we see the expected dividends in 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It is expected to grow at historical rates from here. And overall these dividends look pretty good to me, but how about the historical returns? I decided to compare Realty Income stock with the overall market. In this case the S&P 500. Next to that I added ADC and NNN. On the 5-year chart we see that Realty Income only returned -7%, and this is including dividends. The S&P 500 did return 103%, massively outperforming all stocks in this list. On the 1-year chart it looks pretty interesting, with the S&P 500 again beating all stocks in this list. The 3 REITs are all having significant lower returns. Only NNN managed to get a positive return here. On the 6-month chart it is again the S&P 500 that is having the highest return with 22%. And again, NNN came really close. Realty Income had only 4% return. On the 1-month chart it is NNN with the highest return together with the S&P 500. So bottom line, the S&P 500 was by far the better investment in the past 5 years. But with the stock being hammered down a lot, it could be a great potential investment. So, could this be the perfect time to buy a Realty Income stock? Well, let's check the 3 price targets that I'm creating using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets. For the revenue growth I'm filling in 8, 10 and 12%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 21, 22 and 23%. For the free cash flow margin I'm putting in 70, 72 and 74. For the PE ratio I'm putting in 20 since it is a REIT. And for the price to free cash flow I'm putting in 12, 13 and 14. My desired annual return is 15%, since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety here. Right now, Realty Income stock is around $52. I hit analyze, and we see a few green numbers. And since this is a REIT, I'm only focusing on the discounted cash flow value. We have a low price target of $51, we have a mid price target of $63, and we have a high price target of $77. And to me, the mid price target is the most justified here, indicating that this stock is undervalued. Please let me know the price target that you think is the most justified in the comments down below. My final conclusion on Realty Income is that it is looking pretty solid for now. Earnings weren't that spectacular, but I think they did a decent job here. Most fundamentals look pretty good and they have a really long track record. I love the fact that they are acquiring a lot lately. This will contribute to a high growth in my opinion. However, the margins is something that worries me a bit. From a dividend point of view, things look really good. You got a great dividend paying stock and they also have a long track record of increasing the dividends. From a value point of view, things are also looking pretty interesting. I think they are undervalued by a decent amount, so I think I will pick up some more shares in the upcoming period. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.